Hello there, welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. Today I want to talk about precious metals. The last time we looked at gold was on the 6th of December in this video on the screen. And that's about right here, where I mentioned that these couple of green candles were made by the traders that were probably a bit too early. I suggested that the daily cycle might continue towards its end, perhaps somewhere around the FOMC meeting, and so far that's exactly what happened. On that day, just after the FOMC meeting, we see this huge green candle on the 13th of December. And what it tells me is that a new cycle has started. The previous cycle lasted for 30 days. That's a little bit short. Usually these daily cycles in gold last anywhere around 1.5 months. Of course, some can be shorter, some can be longer. But we've had enough of a decline, tested the 50-day moving average, and we are now off to a third daily cycle of the ongoing intermediate cycle. Within this new third daily cycle, gold is likely to at least test that recent new all-time high before dropping down into the end of the daily as well as the intermediate cycle. And as the markets usually like to create as much pain as possible, one very likely scenario is a fake out, a fake break above that previous all-time high to lure in all the inexperienced traders before dropping down into that daily as well as intermediate cycle low. There might also be a fourth daily cycle in an ongoing intermediate cycle, perhaps giving you some sort of a head and shoulders formation for that decline into the intermediate cycle low, which would be your very nice buying opportunity. But today I want to focus more on silver, as I've seen some requests about silver in the comments. Generally, silver does follow gold. At the top of the chart here, we see silver, and gold at the bottom. We see silver does follow gold, although the intermediate cycle lows might vary plus minus a week or so. Sometimes they come pretty close to each other, as over here in November 2020. And sometimes these lows on silver might come a couple of weeks early or late compared to those lows on gold. So just like gold, silver is already quite a while into the ongoing intermediate cycle. The intermediate cycle is 73 days long. Usually they last for around a half a year, usually after midpoint. So after 2, 3, 4 months of generally trending upwards, you might start to be a bit cautious. So we still have time for silver to test $27 very likely. Let me switch to this chart. So over the last couple of weeks, the silver price has cycled from the top of the Bollinger Bands all the way down to the bottom of the Bollinger Bands, as gold has been declining down into this daily cycle low, and RSI has cycled from all the way at 76 all the way down to 39. That previous daily cycle is at the top of the previous intermediate cycle in silver, somewhere around $26. And with this new push higher, I think there is a pretty good chance for silver to test $27, as that would coincide with the top of the intermediate cycle in early 2022. There might be some resistance around 27. But we are quite far from 27. So I suppose there is still some profitability, at least 10-11% upside left before silver hits that resistance zone. Next, as we usually do for gold, let's have a look at the optimism index. For silver, usually you want to buy when markets are really depressed, as they say. You want to buy when there is this proverbial blood on the streets, and when everybody is elated, when everybody is excited, as let's say over here in July 2020, you probably want to trim your positions, take some profits before an eventual cool down. Now looking at where this optimism index, the blue line, usually tops, well, during relatively modest times, this optimism index tops with the intermediate cycle tops somewhere around above the level of 60. That happened all through the middle of this year, for example. But during more elated periods, as in the second half of 2020 and early 2021, intermediate cycle tops come with the optimism index topping above the level of 70. And I think in the ongoing intermediate cycle, let's zoom in a little, there is a pretty good chance for the ongoing intermediate cycle to continue pushing higher until this optimism index breaks above that level of 70. After all, silver has some catching up to do, as gold has already shown us new all-time highs, and silver has only tested $26 at the previous short-term daily cycle top. So as I mentioned, there is some catching up to do, and Likely profit opportunities until silver tests at least $27 or perhaps noticeably higher. Next, let's have a look at seasonality, and usually I like to look at seasonality since 2015 from the end of that bear market in commodities. This is seasonality on silver, and it's somewhat similar to that in gold. Usually silver declines down into somewhere early to mid-December, followed by a strong push higher into that Chinese New Year in January or February. Looking at the bottom side of the chart right here, we see that December and January are usually big green candles. So seasonality agrees with our expectation of continued profit opportunities for another few weeks in silver. For much more detailed and regular updates on a range of assets, join us at myfinancesteacher.org. Some of the most important recent updates is yesterday's update on energy. As crude oil has been sliding down for a couple of months and natural gas has been sliding down for a few weeks, that's all according to our previous expectations, by the way. But is there a profitable buying opportunity coming up in either of those commodities? Again, join us to check that out. To do that, just scroll down and click this Join Now button. By the way, the membership fee is going to increase in January. That is all for now. Have a fantastic Friday and a wonderful weekend. Bye-bye.